All right, so here we are in the After Hours show, and Daniel stuck around to join us for this. So, Dan, welcome back here. And so, Dan, you're out in California. I was just actually out in San Francisco just this past week, and yeah, it's all over the press. Just obviously all the fires and everything that's going on there. What's going on down there? Are you okay? And are you in an area that's being impacted by this? Why don't you give us an update?
Yeah, so thanks. Thanks for having me, and thanks for asking. We are fine here. So I live in San Rafael, which is in Marin County. Means you go over the Golden Gate Bridge from San Francisco to get here. I'm about 7 miles north of the bridge. The fires around here are in a town called Windsor, which is, I think, about 50 or 60 miles north of me.
Right.
We've had some smoke in the air, but no worries down in this area. The big issue we've been dealing with is PG&E now, and
The power
in,
outages, right?
in our day and age, if you're going to get sued every time there's a fire, they're going to start putting out electricity every time the wind gusts, right? So we had no power for 3 days this week, which was a blast. Let me tell you, 3 days doesn't sound like much until you lose your power for 3 days, and then
Oh,
it's
you,
Yeah.
a long time.
So they just cut it off like they didn't like for the full 3 days. You were powerless.
Yeah. Yes.
Wow.
wow. And
Um,
are you allowed to? You can just go and grab a generator, right? Is that what a lot of people are doing? Just doing manual generators?
Yeah, so smart people did that in advance, and other people like myself found out that they're sold out once you try to do that.
Yeah, that's funny.
Except for that one guy that's selling them at 3 times the value out front of Home
That
Depot.
Exactly. So the thing about it is, for this day and age, you need internet to work, to do your job. So
hmm
even if you had a generator, you weren't working if you're doing it online because you don't have your internet in your house, and then if you try to use your phone as a hotspot, the phone system is taxed fully.
Yeah.
So you're not getting any data through there anyway.
It's not like
Wow.
you live in an area where technology is important or anything, though.
No, no.
Oh my
Anyways,
God.
Some of the worst cellular connectivity is in Silicon Valley, and try to figure that one out.
okay, so let's. You were mentioning earlier the fact that these microcaps have been underperforming, and it's obviously something that most value managers have been complaining about for a while. Do you think that this is going to change anytime soon, or do you just kind of think I'm going to pick the 20 stocks that work? Like, what do you see as the potential for this atmosphere of this trade being so shunned, kind of at least receding?
I think I don't know when it ends, but I think we're closer to the end than the beginning. So I think you can actually look at large cap and try to get a sense of when it's going to change for microcap. In what I mean by that is there's a shift from active management to passive management, as you know and you've written about, right?
Yeah.
So as long as that shift is going on, there's more money going into a handful, or it's a pretty big handful, but a handful of stocks, but definitely not going into MySpace and going away from active managers, so they don't have the ability to look at this. So once there's a tipping point and people start saying active management is more important, I think that's when this whole group bottoms out.
So, but the one thing that I kind of push back to in all these people that are complaining about the how much the passive is taking over is that in this kind of change is an opportunity. Like if you're sitting there and you're not in the index, that means that the stock is cheaper. If nobody's buying your names, then that means you have more cheaper stocks to pick from. And yeah, I get it. Eventually, someone has to pay more for them because the reality is, if they're just forever cheap, you're not going to make any money. But the truth of the matter is that if you're a true kind of fundamental investor, then we should see a situation where that this is creating more opportunities and making it easier for active guys to outperform because you're getting a situation where you can buy your stocks at like pennies on the dollar or cents on the dimes on the dollar versus having to pay up for growers like paying full price for Amazon.
Well, you're absolutely right, but it doesn't happen immediately. So if more money is leaving active management, you can buy a cheap stock, but there'll be sellers in that stock as more money leaves current holders of it to go to the passive management. So you have to, it's all about the money flows at the end of the day. So once the money stops leaving the group, then they have an opportunity to start outperforming. But as long as money,
but I agree with you that the money flows are important, but ultimately the bigger companies should be in there buying these cheap assets.
well, that is so. I was meeting with one of my investors today, and he said, "Well, this group's under pressure. Where do you see money coming in to help these companies that need money?" I said, "It's going to be strategics." I said, you look at companies that are trading below the asset value, and who better to step in than somebody else in the industry to pay up for that.
Yeah, exactly. It's like when uranium was like this. You could buy an ounce, you could buy uranium cheaper on the stock exchange than you could by actually trading it on, like actually buying uranium as a uranium company. So it made no sense for people to go out, like instead of a uranium miner actually mining uranium, they'd be better off just going out and buying it on the exchange.
Yeah, but the problem with that from an investor standpoint is you're sitting there holding an asset that's doing nothing, maybe going lower until the day it decides to go up 200%.
Yes, you're right. And then not only that, the truth of the matter is that a lot of these strategics are stealing some of these assets.
Yeah. Oh, yeah. That's been one of the concerns with one of my companies that's trading well below investment capital, and the clinical results is another healthcare company. Clinical results.
Okay, well, give us a name. What is it?
Oh, that's Hancock Jaffe. Its ticker is HJLI.
HJLI. Okay, yeah, I'm with you.
And that
There's
company,
a chart of it.
yeah, it's how's that look? I don't know if you'd even dare to ski down that, right? So,
No, that's a good line.
We're going to use that as the title of the episode.
But the amazing thing is they put out 3-month data on their they have a valve to go on your leg to replace having to wear those pressure socks. You need pressure socks because your valves aren't working. So it's a replacement valve. There is no competitor in the market. They had 3-month data a few months ago. It was fabulous. They put out 6-month data last week. It showed an even better improvement versus 3-month. That's 6-month is the data everyone's been waiting for. That's when strategics and potential buyers will say, okay, this product's for real. So the science works great, and the stock is on its ass. I mean, the science works better than anyone could have hoped for if you'd bought the stock.
Right. And yet the market doesn't care. And in fact, it's not only that, it's actually punishing it. Imagine if they'd had bad news.
And coincidentally, they need more money, right? So that's
okay. So that's why the market just will not bid up anybody that needs money.
Right, exactly. But even once again, I'll take the dilution to own this science.
Right.
Yeah. Right. And one of the things that I always used to find with my days when I was on the desk is that sometimes the market would punish these guys, and somebody smart would come up and go, "Oh, I'll do that deal. I'll just take 100% of it, and I'll do it a dime above the market."
Yeah.
Right, because everybody is expecting the dilution, and we've in fact I know a great story of a guy that got short. Everyone knew this deal was coming. It was a mining stock, and he shorted the shit out of it. And then what happened was, this upstart of a kind of a new non-bank broker dealer came in and did a bought deal above the market, like it just to make a splash. They were new. They came out and they did this bought deal, and it immediately sold. And this guy was short, and he basically phoned up and yelled at them like, "Do you know who I am? You got to give me some of the stock." And they said, "Well, you don't pay us. Go fly a kite." And the guy ended up being a great deal for the people who bought it, because this guy was chasing in the aftermarket to get us short in. So I do think that sometimes the market gets punished, and maybe that's not the case here. And unfortunately, there's no buyers, there's no buyers. You do need a situation where there's a big buyer. But I almost wonder if we get into a scenario where the stock market starts to go up again, and people return, like a retail returns to the market, that they might start looking at names like this, and the repricing might be quicker than we expect.
Oh, I think you're absolutely right. But you brought up an interesting thing, which is shorts. So in this stock, it's pretty thin. It's not wildly shorted. But I have some of my companies that have significant short positions in them, and
Right.
and the shorts are obviously controlling the trading. You can see it, but
Okay, you got to give us a name, Dan. We got to unless you're uncomfortable, but like,
oh, happy to. So
okay,
CAT, which I've talked to you about for years, Kevin. Ticker's CATS, CATS.
cats. Okay, let's have a look here.
And so
Okay,
this is one of my winners.
okay.
And I got into this thing at around $4 a share, and it's been my largest position since that price.
And the shorts are they're non-believers, and they kind of try to talk it down. Do they? Like, how does it work?
So the short position in this is 2.4 million shares, which is 35% of the float. It's massive, and they're paying about 30. It depends on who you're with, 30 to 40% annualized to borrow the shares to short it.
Wow.
Yeah. So they don't believe the story. What they don't believe is this: the company did about 18 million in revenue last year. I can't remember the exact number. They're doing 35 million this year, and they're going to guide in the next 2 weeks when they report, and they're going to guide to 90 million. I say that because they just got a loan done with Goldman Sachs, and in the loan they guaranteed at least 90 million in revenue. So the growth is fantastic, but I think the shorts are just saying, oh, we don't believe that they can put up these kind of numbers, and stocks move too far. And I think they're screwed. And if you look in the last week, the stock has spiked. What's that, about 20% or something? It's about to take off because they're nailed. And I see the potential for short squeezes in a number of my stocks, where
Okay, let's get another one. So we got cats. What else do you see that could get squeezed?
Provention, which is PRVB.
Okay, let's have a look at that.
So, okay.
I notice a lot of biotech stocks in your names here, Dan.
Yeah, well, the Caddis is not biotech. There's a lot of healthcare.
Okay. So what happened here, by the way, that this thing had a huge spike in June, and
So this is biotech. They reported fabulous type 1 diabetes results, delaying onset of type 1 diabetes in kids that are genetically inclined to get it, which, that's the holy grail for diabetes is people know you're going to get it in most cases based on genetic markers. How do you stop it? And these guys seem to be able to do that. The stock spiked to 20-ish, and then they said we're going to do a financing, and it traded down. They tried to pull the financing, but you tip your hand, everyone knows it's coming. So they ended up doing this financing at $8 a share. There was a huge short position. Insiders have been buying the shit out of the stock. I said I can swear, so that's
you're definitely allowed to swear. You're just
Insider,
not allowed to say inappropriate words like Patrick does.
Oh my gosh! You get insiders buying a couple $1 million worth of stock. That's a telling signal, right? But what happened was, and this is similar but different to your story about the short guy. There's a big short position in this, and they did a deal of total $60 million at $8 a share, and they shut the shorts out. So what happened was the shorts went out and knocked it down and just pressed their bet. This is one. I think this is kind of a layup for year end because smart money came in at 8. Nobody likes to show a loss on doing a financing, so they're going to push this back up through deal price and then try to run it into year end is my guess. Plus, they're also filing their IND with the FDA for a type 1 diabetes drug that's worth potentially billions of dollars.
So, Dan, I want to change the topic a little bit here.
Yeah, sure.
Because you know what? You've been giving us great stories, but I have to say that, like, having dealt with a very large amount of retail investors, when I go and tell someone I'm bullish on the stock market, they couldn't give a shit. But if I turn around and give them a great story about a stock and why it's going to go up, they will just soak that up and load the boat. The retail investors are very susceptible to a great story. That's just like the human nature.
Mm-hmm.
And so a lot of our listeners right here are hearing these stories and might be excited about one or two of them that they're hearing from you. So now, like, you've been in this business for a while now, and you obviously have gone through the trials of and the learning process of how to deal with microcaps. So in this situation, if what is advice could you give our listeners, or what do you wish you've known when you started out, like in terms of someone that's hearing these stories? How do you size your trades? How do you manage them? What are the red flags you're looking for that they should be watching out for when they're getting into these kind of microcap stories?
Yeah, I mean, the first thing I do is talk to management. Management's the most important thing, and realize that every management team lies. It's
So talk to them just so you know what the lie is.
what degree of lie that they're telling you, right? I mean, that's really the bottom line. They're all out there trying to get their stock higher, and in microcap, they all need to raise more money for the most part, right? So they're telling a story, and you have to figure out which parts are real and which parts aren't, and that's the toughest thing to do. So I mean, I would be taking everything management gives as guidance with very jaded on guidance. So that's the first
Right.
rule. You read a transcript of Seeking Alpha and don't believe any of the guidance. Right.
Yeah.
That's what I would say. I frankly in the last year I got burned twice by management teams that were quite frankly fraudulent, and that
Yeah.
happens.
That
Um,
happens in the
So
microcap
how do
space.
you, Dan, in terms of sizing, how do you, like, obviously everybody's different because everyone has different risk profiles. What do you have like benchmarks in terms of I won't have a position bigger than X percent? Like, how do you kind of decide how many names you're going to own, and do you use leverage or is it just pure cash? Like, how do you run your stuff?
yeah, so I'm running this as 100% long, but no leverage involved.
Right.
Um, and the reason I'm doing that is because I've been doing this long enough to realize that you know I don't want to try to play market timer, and I'm not even going to tell you I'm good at it or not. It's it's a it's a game that gets you away from the important things, which is that over time, and we kind of touch on this. Over time, fundamentals are going to drive this, and you'll get your value if you can get the fundamentals right. So that's sort of the game plan I'm sticking with from a top-down perspective. I mean, I tend to start with smaller positions and grow them over time as I develop more confidence in not only in the management but also in the story coming together the way they say it's going to. So you speak with someone, they tell you X, Y, Z is going to happen, and if it does, then you start to you start saying, okay, well this makes sense, and if only X and Y happens, then you don't get any bigger, or
All
you
right,
deal with.
I want you to elaborate on that, Dan, because do you have a tendency to dollar cost average down into a loser, or do you have a tendency to add to your position once it's winning? Like, what's a tendency, or is it both, and it's just dependent on the story?
I tend to add to positions that are executing regardless of if they've gone down or gone up. Um,
Okay, so
and,
it's
and
story
that's
based.
if a position is not fully sized. And once a position gets over 10% of my portfolio, so I run a pretty tight portfolio, right? Once a position gets over 10%, I'm not going to be adding to it. And then, and then I'll start to selectively trim it as it gets. I've had that Catasis. I was a 10% position at $3.50 when I finished it buying it. It's at 15 or 16 today, right? So, but my position's only around 18% right now. So
So you've been trimming, right?
I've been taking a lot of money off the table. When it got over 20, I took it down pretty good. So, and I took
Yeah,
it down again recently.
that's a good problem to have.
Yeah,
I wish that curse upon everybody.
yeah. And frankly, I really want to let things ride more than
Yeah.
I do, because if this is truly public venture capital, and venture capitalists make 80 or make 100% of their money from 20% of their portfolio, so I should keep the 20% that's working really well. But I guess I'm arrogant and think that I can pick more than 20% of my stocks will be winners, right? So I spread it out.
Yeah.
So do you actually think that the venture capital opportunities in the public market are greater than somebody that, let's say, had access to the private market?
Well, I think the private market's incredibly overvalued, and you're seeing that as Uber and Lyft come public, and they have lockups expiring, and those things are down. I mean, look at how WeWork was valued. They tried to go public, and all of a sudden people realized what they had, right?
So what sort of kind of, like, you're on the ground a little bit there, like you're in pretty close to San Francisco. Do you think that this is going to have ramifications? Do you think the WeWork was the start of the end?
I don't think it was the start of the end, because I think you've been seeing this for a little while with, like I said, like Uber and Lyft, and then you had that disaster. What was it, Theranos, right?
Yeah.
Yeah. So I really think that that for this area, the number of, it's definitely, the game is changing, but to start the end, it's so difficult to say, because I think from an investor standpoint, I wouldn't be putting money into this. However, so many investors look in the rearview mirror and throw money out there, and there's so much VC capital right now that they can continue showering these companies with money for a while yet, and watching them lose at the end of the day, right? And
so you don't see that like drying up anytime soon?
Oh, I do think it's moving in that direction. I totally do, but I just don't know when.
Okay.
And it's very it's so funny the way they price their books. Kevin, you bid up my stock in this round, and I'll bid up yours, and we'll both show a nice gain and take some fees for it, right?
Yeah. No, I know. And how about these private equity guys? They just, not only do they bid them up against each other, they sell them to one another.
Right. It's wonderful.
Yeah. Yeah. And then and the fact that WeWork, like, they just, if you're just doing like a marginal financing at the margin, you it makes sense to just do it yourself and do all of it at a new price, because you get to mark up your whole price. Like, you could almost set your own price. Anyways, it's just like, I think it's mind-bogglingly crazy, and I'm probably more worried about it than most, because I look at the WeWork and I just wonder if you have something that big that can go down that quickly. It wasn't like it was 10% overvalued. Like, what did they go? They got chopped in like 80%, right? Am I right? What was the number?
Yeah, something like that.
Well, it was more than that, dude.
Was it 85 down to 6 or what?
It's 45 down to 8, I think, is what it was. But whatever.
No, I think it was higher than 45. Anyway, it doesn't matter.
It was more than 45.
It doesn't matter. It wasn't just 10 or 20%, and it wasn't on $100 million stock. These are billions and billions of dollars that are getting just kind of marked to fantasy, and it's unbelievable. And I think we're going to look back and we're going to be just amazed that we allowed this to continue with these private markings. Like, I think it's crazy. But
correct me if I'm wrong, Kev. Was it there not just a headline that Ackman came out and said that SoftBank was a zero?
Yeah,
that's not. But yeah,
there was some headline.
No. But he also said Herbalife was a zero. So let's not listen to him. But
no respect from you, is there?
I don't know. He's not one of my favorites. I'm definitely not gonna. Maybe if somebody, if Chino said it, I would be a lot more sympathetic. And
there you go.
Yeah. I'm scared. I'm scared of that whole venture capital, or even more so like the I don't know if it's called venture capital when it gets that big. Is it still venture capital with WeWork, or is that just private equity?
Yeah, that's called venture capital. But the thing about WeWork is it might be 100% overvalued right now.
Yeah, like it's still. Yeah. No, I hear you. But just the fact that you had this sort of mispricing is just mind-boggling to me. And I've seen mispricings in my day, but this is on a big asset. This isn't on something small. Mm-hmm. And I think that this has been affecting economies. That's how important it is. And I think that when we look back, we're going to be kind of Like I'm not as convinced as you that this wasn't the beginning of the end. Maybe you're right. Maybe they'll be able to get it even bigger, and
Oh,
maybe it is.
I think the end is coming. I just think it can take a lot
End is
longer
nigh.
to play out before it gets really ugly.
Yeah, and I actually hope that what you find is that this money goes, instead of it causing some sort of massive dislocation in the economy or the market, it just comes out of private and goes into cheap public markets. That's what my hope is.
Yeah.
You know, I might be wrong, and who knows. But anyways, that's the story for another day. So you don't see any signs of San Francisco slowing down yet? Like you think it's still everything's okay?
Oh no, the first signs are there, no doubt.
Oh yeah, like what are they? Like tell me what you see.
Real estate prices have come down 1% year over year, but it's slowed down. Rents are decreasing. There's no doubt about that. It's a number of things, but it's happening slowly.
The air's being let out of the balloon, even if it's initially starting a little bit slow. You're seeing that momentum that was there is sort of stalled, right?
Yeah, and it's funny, you know. There was an article about how the WeWork employees are really mad because their options are worthless. And I had dinner at someone's house last night, and their son is tired of the VC game. You know, he's just a salesman, like 20 something years old, right? But he went to a couple startups and realized that, hey, I'm working for crap salary and these options are worthless, and he wants a real job, you know. So it gets ugly quickly when people's options are worthless.
Right. It's in an environment where everybody's making money on the upside. Everyone's happy, and then all of a sudden, as it turns, it gets ugly and it gets scary. Yeah. And it'll be interesting to see how many guys are really holding the bag. Although I don't I'm not a big Ackman fan. He might not be wrong that SoftBank is a zero, because the reality is that they've bought every crazy piece of shit that you can imagine, right?
Oh yeah, and that applies to the public markets too. Just in a sense, like WeWork had the right investors, so did Theranos, and these people pay up for companies that have cachet. And then if companies don't have cachet, they don't get the valuations. And my companies don't have cachet. You know, that's why I feel really comfortable buying them at these levels. And I'd love a marquee investor or two to come in.
You know what? You got to convince them to wear the black turtleneck like what's her face did.
Yes.
Theranos. It's funny that you mentioned that, because we actually don't hear about that story that very much, you know, in Toronto, and because it wasn't a public equity, it wasn't really something that is on anyone's radar. But it sounds to me like you guys, it really affected the culture or the thinking in the valley. Is that correct?
I don't know. I brought it up just as another classic example of overvalued down there, and people not doing their homework.
But it wasn't an example of like you knew people that had invested in it or anything like that. It was just another example of something completely mispriced.
Yeah, it's an example of how the VCs, in my opinion, are more than willing to piggyback on other people and not do their own homework.
Fair enough. Okay. So, Dan, why don't you know what? We're going to wrap it up here. But before you go, why don't you give us one last name that you like?
One last name that I like?
Yeah.
Geez, I got to think about that one for a second. So I'm going to put
not a biotech one. Go look through your inventory. Pick us one that's not a biotech.
You're like... You know what? You're just catching him off guard. Like he's
okay. He's good. Dan's gonna adapt. He's gonna flow. He's my buddy.
I've only given you 2 biotechs, by the way.
Really? It just felt like they were all biotech. You know what? We're Canadians. We're Canadians. We're used to like gold stocks and like uranium mines and stuff. It was like, what's all this tech and
technology
and biotech stuff? Like Canada doesn't have any of those, and not only that, when we do, they just seem to screw it all up, like research in motion or something. So we're kind of suspicious of those.
Okay, I can give you one true microcap name that doesn't trade very much, but I think is potentially a 10, 20 bagger.
Sure, let's
go for it.
Yeah, this is a company called Moniker Group. The ticker is MKGI.
MKGI, okay.
So you guys are familiar with Airbnb, right?
Right.
Yep.
So Airbnb, the Airbnb does what's called alternative lodging rentals. So ALRs, and ALRs are 25% of the travel lodging industry. So if you're going on vacation, 25% of the time you're likely to spend your money on Airbnb versus a hotel. Online travel agents, which are Expedia, Travelocity, etc., can't book alternative lodging rentals because they don't have access to the properties for two reasons. One, they're not immediately bookable, like Airbnb's not, right? And two, they don't pay commissions. So why are they going to show you that versus a hotel? Monica Group has assembled 3 million properties that are alternative lodging. They're all professionally managed, so property managers run them, not individuals. They're immediately bookable and they pay a commission. And then they're partnering with a company called Rate Gain, and they're rolling out to all the major online travel agents, which are, booking. There's one up there in Canada, WestJet, I think, that you can book travel through the airline. United Airlines, Expedia, Travelocity, etc. Go down the list, and this is going to be the vehicle that sits between alternative lodging rentals and online travel agents.
There we go.
They get paid.
What a great idea.
So if people want to learn more about
MKGI.
it, where MKGI, but if they want to learn more about it, Dan, why don't they tell us where to contact you and where to subscribe to your research?
Yeah, tailwindsresearch.com, or just email me, daniel@tailwindsresearch.com, and happy to share it with you. I've written a lot about it. It's all there online.
Thanks a
Oh,
lot.
that's
Thanks for
awesome.
being with us.
Thanks,
Thanks,
Daniel.
guys. Come on.
Take care.